Hey again, folks. So, this is Martin, your mortgage guy, following up to a video I did earlier about why you should not wait to get a home equity line of credit. So now in this video, I'll explain the features and benefits of a home equity line of credit. What is it? How does it work? So generally, the industry standard across the banking industry is that a home equity line of credit, it's like having a big credit card open and available to you, a credit card with a large, with a really high limit. And even nowadays, banks typically will even issue you a card that you can use to make the draws. And traditionally, in years past, decades past, banks would issue you a checkbook, and you could actually write checks against the line of credit at a minimum of $500 on every draw. It's the same today, a minimum of $500 on every draw, but nowadays they'll actually issue you a debit card that you can use that is connected to that line of credit. So if you were doing a renovation on your home, you could go to Home Depot and spend 10 grand and put it on that card, which would be an advance on your line of credit. So what is a home equity line of credit? Typically, banks will lend up to 80% of the market value of your home. So let's say you own a home, your primary residence. We typically do not lend on investment properties. Some banks may lend on an investment property, but only go up to 60% of the market value on an investment property. And typically for an equity line of credit, the bank is a little bit more conservative on their lending guidelines. So usually it's a 680 minimum credit score. We're looking at folks that need to have pretty average, excellent, very good to excellent credit, not a really low debt to income ratio, so not maxed out on credit cards, and lendable equity in the property. So let's say your property is worth $400,000, and so 80% of that is $320,000. And let's say you have a first mortgage that you owe $300,000 on. That means your lendable equity is that other $20,000 of that 80% limit. So a bank might give you an equity line of credit of $20,000. A lot of banks have a minimum. Their minimum might be $10,000. It might be $25,000. Their minimum that they lend on an equity line of credit. Let's say that same scenario, you have a mortgage where you only owe $200,000 on your mortgage because you've been there for a while and the property has appreciated in value, and so your home is now worth $400,000. You only owe $200,000. Well, you're sitting on $200,000 of equity, and $120,000 of that is lendable equity. So you could actually get a line of credit from the bank for $120,000 that you don't have to use, but you have as a safety net, as an emergency fund. If something in life comes up, if you need to buy a car and you weren't planning on buying a car, you need to cover some medical expenses that you weren't planning to cover. Somebody is out of work, there's a job loss, and you need to float yourselves and be able to not be late on any payments for a few months. You have this line of credit as an emergency fund to cover you for a few months until you get back to work. So these types of scenarios are the reasons why people would use the equity line of credit for possibly for some type of investment, opening a business. Some people use it to pay for college. Some people use it to buy a vehicle or maybe a recreational vehicle, things like that. People often use the line of credit for work on their home, for updating the home, remodeling the home, expanding the home, adding more square footage, updating the kitchens and the bathrooms, things like that. So that's already a 5-minute video. I'm going to leave it like that. I'm going to make another video that explains the features on the line of credit, how it works, and I'll talk with you soon.